Hey, let me do a quick explanation about the income statement when it relates to the special items like discontinued operations or extraordinary gains or losses or cumulative effect of a change in accounting principle. And the problem I put up here is your first problem in the homework. I think these are the numbers off the main problem. I can't remember if this is the numbers that everybody's dealing with or if yours are algorithmic, but either way, this is an example you should be able to follow. So the first thing I want to show you is what's given to you. What you're given is all this stuff up here. And what this tells us, this company has sold a division. So they've recognized the gain on the sale of that division as an ordinary gain, and then they've calculated net income. And of course, the question is that correct? And the answer is wrong. That is not correct. When we sell a division, that is the same as discontinuing an operation. And so when we do that, we have to remove we basically remove the effect of that operation from our regular income statement. So, I've kind of just started with the operating income. Of course, your full income statement would have your revenues and your cost of goods sold and then your operating expenses to arrive at operating income. So this is the revised income statement. And I want to just show you the connection, right? So I've brought these down. This is the numbers where we're starting. So this is how we make the connection. Now, the first thing we want to do, and of course you wouldn't enter it like this into your homework, but what I want to do is show you how I arrived at the revised operating income. And the way that I did that is we want to, because this company had losses, we want to add back those losses. So they had a pre-tax operating loss of $425 in 2013 and $325 in 2012, and so we need to get rid of that. We need to take it out of these. Let me get this eraser. We need to take this out of these operations, and so that's what I've done here. So I end up with a revised operating income because I've added back those losses. Now, I've taken that out. There is no gain because it's not an operating. These gains are our operating. So I've got revised operating income. My income tax expense is still 40%, and I end up with what we used to call net income, but now we're calling income from continued operations or continuing operations. This is just exactly what it describes. Of our operations that are going to be ongoing, this is our income. And now from that, I need to report the discontinued item. So there's two things I've done here to do this. First of all, I've recorded the loss of $325 in 2012, and I've also recorded the loss of $425 in 2013. But I also had a gain. Remember that original gain of $650? That has to be considered here. So 650 minus 425, that's how I get to the 225 positive income. Now, because I've already reported income tax here, these items have to be reported net of tax. And so because this is a positive income, I subtract 40% to reduce that to be the after. So the after-tax income effect is $135. On this side, because I had a loss, I actually get a tax savings or tax benefit. So 40% of that reduces the amount of my loss. And so, how do I arrive at net income? Let's get rid of some of these scribbles again. I arrive at net income by taking my income from continued operations plus my income from discontinued operations or minus my loss from discontinued operations to equal net income. All right, I hope that helps.